Hey, I'm here at the DMAR golf outing with Chuck Simmons with Motto Mortgage, and you know what? It was just about a year ago, wasn't
Yeah,
it? We talked a little bit.
this same conversation.
So what happened a year ago about this time?
So a year ago, the Fed lowered the rate by a 0.5%. The
Mm-hmm.
market did not like it. Everybody thought because the Fed lowered their rate that the mortgage rates would come down.
Yeah.
The market did not like it, and mortgage rates went up quite a bit.
So guess what happened this week?
So this week, the Fed lowered their rate a quarter. Market so far hasn't really liked it. They were hoping for a little bit more. Yeah. So the rates are going up. The mortgage rates are going up a little bit, but I think that'll be temporary and come back down.
Yeah. So what's current rates right now in the Des Moines market? Where are they kind of heading?
They're heading down.
Yeah.
The conventional rates are in that 6% range.
Okay.
FHA, VA in the 5.5% range. So yeah, they've been real good.
So, last week's show, I was talking about the rates, and I said, be careful what you ask for or wish for, because, the Fed was talking about dropping their rate. And I said, when that happens, we're probably going to see mortgage rates go back up. And we sure saw that, but I think we still have some room to have some optimism.
I agree.
And rates probably will maybe bubble back down a little bit and up and down and up and down. But you think we're going to end the year in under 6?
Yes, I at this point I do, because the Fed's talking about lowering the rate another 1 or 2 times, and then into 2026. So I think with that we will see rates, continue to come down and get there just below 6.
I tell you, it sure saved the market last year. We were running behind in sales, and it really, that September, October business really picked back up. And this year, we're ahead of last year, but not by much. Right. So if we get any kind of slowdown, it's going to be tough. But I'm excited for the end of the year, and
I'm looking forward to it.
So anyway. Yeah. Chuck, every year I come by your booth here at the golf outing, and I appreciate your wisdom. And
absolutely.
We'll do this again next year.
Sounds great.
All right. Thanks.
All right.
Well, how's that for an opening this week? Hey, Les Sulgrove here with Central Iowa's Real Estate Market Update for Simply Des Moines. You can find us each week at DesMoinesMarketValues.com. Be sure and hit that subscribe button, hit that like button. It makes a big difference on how far this channel gets sent out each week. So thanks for everybody that did that. So last week was a big week. In fact, this week's show is all about some pretty good news all the way up and down the line here. I've got a nice positive outlook for Q4 coming up. We're about a week away from the fourth quarter. And the title of this week's show is The Finish Line is in Sight, which basically, we got about 100 days left of the year. And I think we're going to be able to start making some predictions here coming up. So let's take a quick peek at the dashboard. There's a couple of stats here we're going to talk about on the dashboard that we really want to focus on. Pricing is basically the main one at 339.9 year over year. We're down 6.5%. The biggest news so far is 4,283 homes for sale. I'm going to show you some graphics on that and how long it's been since we've been above that number. We're also hit that 10,000 closed sale milestone. We're at 10,025 sales as of today. Actually, it happened on Friday. This is Sunday the 21st, so it would have happened on the 19th. And we're well on our way to potentially busting through, at least last year's numbers for sure. And how far up will we go from there? So let's take let's look at everything that's happened this week and kind of see where we're headed here. So, all right, as we talked about at the very beginning with Chuck, and thanks again, Chuck Simmons from Motto Mortgage for coming on with me like he had any choice at the DMAR golf outing this last week. It was kind of interesting that it was just a year ago that we talked about that same subject, and here it was just exactly a year later. But this is really quite a graphic to look at today, because you can see right over here on the far right, this little nib right here. That's when this is where we came down a 0.25% on the Federal Reserve rate. So it's at 4.25%, and I'll add that percentage on there next week, but at 4.25 right here. And if we go all the way across the graphic here, you can see how far it's been, or how long it's been since we've been at that percentage rate. So it's been almost 3 years, 144 weeks, and my brain this morning couldn't do math because I was trying to do months instead of weeks. But anyway, 3 years, almost 3 years back since we've been at below 4.5% on the Fed rate. So with a conversation of more to come, I think that we're going to continue to see rates come down as we move forward. The local rates went up a little bit, but the federal or the national average still came down this past week to 6.26%. Some of that's because of the fact that the national rate is calculated from Thursday to Thursday, and the Fed met on, I think it was late Wednesday, early Thursday morning, and that's when the rate drop happened for them. And so therefore the weekly average is actually what came down. So um, I think we'll see next week maybe the weekly average go back up just a bit, but it's going to be short term, and I really feel like we're going to see rates continue nationally to come down. I know, as Chuck said in the beginning, 30-year fixed rates at about 6, and government loans are 5, and between that 5 and 3/4, around that range there. So a lot of opportunities, and the rest of this show is going to show you where those opportunities are. So let's take another look at what these rates look like. Now, this is the 30-year fixed rates. Again, this is the average 30-year fixed rate average mortgage from the national side, but this is looking at those rates year over year. And what we see is that at 6.26%, we are actually at our lowest interest rate year to date so far this year. And if you look back into the third week of January, we were at 7.04%. So not quite a full percent higher, but I think we're gonna have that 1% spread here before we're all done with this year. You know, that's quite a range difference there. And if we look at what does that mean for buying power, look back at that week 3, the buying power of a $2,000 a month principal and interest payment. Now, this is how I calculate the buying power. I look at a $2,000 a month principal and interest payment on a 30-year fixed rate mortgage, and it's simply the principal and interest only, not including taxes or insurance or any mortgage insurance on top of that. It's simply the P&I portion of your payment. Back in January, week 3, the buying power for that $2,000 is $299,400. Today, that same $2,000 principal and interest payment will allow you to spend up to $324,480. So that's a huge jump in what you could have bought for back in earlier the year. In fact, it's $25,000, more than $25,000 in buying power today. So we talk about buying price points. When you're out looking at homes, sometimes you're looking between 2 and 2.25, 2.5, things like that. This is actually a major price point break that you could probably move up your buying power and your buying search into if you were not finding what you were looking for in your current price points, because the buying power is there that gives you an additional $25,000 pricing or purchasing power there. Now, on top of that, we've seen list prices of homes come down this past year. And so I've left that 25,000 more buying power tag at the bottom there because we're going to add some more dollars to that. And if we look back at that week 3 compared to today, the list price is down about $10,000 from week 3. So again, from about $350 to about $340. So now you've got an additional $10,000. So now you've got a total of about $35,000 more buying power. And if you were looking last year and you kind of gave up and you said, what's the point? I'm going to wait until prices come down or rates come down. Now, that also made quite a drop because our list prices are down year over year about $23,000 from this time last year. Now, of course, the same time last year, rates were going down as well. So I really can't do that calculation of the additional buying power. But gosh, $23,000 lower list prices out there today than what we had a year ago. That's still a pretty good incentive. If you're considering buying or if you've been on the fence about whether or not to buy, this is the time to get in because rates are coming down, list prices are down, and I think we've seen that affecting the market. Now, on the flip side, we're also seeing home inventory levels on the rise. We've got 4,283 homes on the market as of today. This is Sunday the 21st. And if you look across this graphic going all the way back to 2009, right there between 2019 and 2020, we were sitting at 4,262 homes for sale, and we have surpassed that. And you have to go all the way back to 2013 to see a point in time when we had more than 4,262 homes. In fact, it's been, get this, 622 weeks or almost 12 years since we've had this many homes for sale in our marketplace. So that's a huge number. And I think if you're going to be out there talking to homeowners and home buyers out there in the marketplace, we have not had this kind of selection in 12 years, and that's a big talking point that you should be sharing out there to everybody this year. Rates are down, inventory is up, selection is available, prices are down. What a better time to be a home buyer in this marketplace, and also be a home seller, because you've got more selection when you make your move into the marketplace. The last stat we're going to talk about is closed sales this week, and we did hit that milestone of 10,000 closed sales in 23 days, from 9,000 to 10,000, and that's a pace much faster than even 2024, when it took 27 days. Same in 2023. And if you look back on a month-over-month basis here, or I should say the closed sale pace of $1,000, not dollar, 1,000 closed sales metric here. It took us just 23 days. Boy, I'm having trouble today. This is why you're not seeing me on the screen. I've been fighting a cold, and apparently my brain's out just a little bit. But it took us 23 days to go from 9,000 to 10,000. When we went from 8,000 to 9,000 closed sales, it took us 22 days. And we've been actually outpacing, with the exception of a couple of those $1,000 closed sale milestones. We've been outpacing each of those metrics here this year, with the exception of a couple of them. Let's just leave it at that here. And you know what? There's still some good signs in the marketplace as far as closed sales go. We're currently 464 home sales ahead of last year. Keep that number in the back of your brain for a second here. We're just selling more homes, and at a faster pace throughout this year. And I think if we end up with having that little burst of energy from home buyers and sellers out there with the lower interest rates, I think there's a good chance we're going to break another record this year. And that record is going to be whether or not we can push beyond 14,000 closed sales. We have not done that since 2022. And what do I mean by that? Look at that. We're 464 days ahead of last year's closed sales. And we're also closing properties 2 weeks faster, with 102 days left in the year. So what that basically means is we've got just over 102 days to close basically a little over 3,000 closed sales, or 2,500 closed sales, because we've got to, already about 464 ahead of this year. Plus we've got to hit through the 13,000 mark there. So is 14,000 closed sales a possibility this year? I think it is, actually. This week, I really, really feel confident that we can, and very likely will do that, as long as we do have that little bit of a burst of energy that we're expecting here from the lowering of mortgage interest rates. So, all right, gang, that's the show. It's been a good week to be in the real estate market. Home sellers and home buyers, homes are starting to sell a little bit faster, and we certainly have the inventory out there for you. So please, again, hit that subscribe button. Let me know if you have any questions. Thanks again to Chuck Simmons from Motto Mortgage. Appreciate his participation in this week's show, albeit it was forced. And we'll talk to you all again next week. Stay safe out there and enjoy the cooler weather supposedly coming.